Demystifying taxes. Everything you need to know. Chapter 2. Understanding tax forms and deductions.
Hello everyone, welcome to Investment Criteria, Financial Education for All. Today we continue our series on taxes. In this chapter, we're going to unravel everything about tax forms and deductions. Don't miss it because this is going to be very useful.
That's right, Emma. Tax forms may seem confusing at first, but understanding them is crucial to making sure you're paying the right amount of taxes and taking advantage of all available deductions.
Completely. So David, why don't you explain to us what these tax forms are and why they are important?
Sure, Emma. Tax forms are documents that the Internal Revenue Service, IRS, uses to collect information about your income and expenses. These forms help calculate how much you owe in taxes or whether you are entitled to a refund. One of the most common forms is Form 1040.
The famous 1040. But what type of information is included in this form?
Form 1040 includes information about your taxable income, deductions, tax credits, and your filing status. Essentially, it summarizes everything the IRS needs to know about your finances for that tax year.
In addition to Form 1040, there are other supplemental forms that may be necessary depending on your financial situation. For example, Form 1099 for self-employment income or Form W-2 for wage income.
Understood. So what exactly are deductions and why are they important?
Deductions are expenses you can subtract from your taxable income to reduce the amount of income you pay taxes on. There are two main types of deductions: standard deductions and itemized deductions.
That sounds good. Can you give us some examples of common deductions, Sophia?
Sure, Emma. Some common deductions include mortgage interest, donations to charities, and medical expenses that exceed a certain percentage of your adjusted gross income. Additionally, there are specific deductions for students, such as student loan interest.
Incredible. So how do we decide whether to take the standard deduction or itemize our deductions?
That's a great question, Emma. Generally, you will take the deduction that is greater. The standard deduction is a fixed amount that varies depending on your filing status. If your itemized deductions, such as mortgage interest, charitable donations, and medical expenses, are greater than the standard deduction, then itemizing your deductions may be more beneficial.
And let's not forget the tax credits. Unlike deductions, which reduce your taxable income, tax credits directly reduce the amount of taxes you owe. Some common credits include the child tax credit and the earned income credit.
That's great. But are there any tips or tricks to make sure we're not leaving money on the table, David?
Absolutely, Emma. Maintain good organization of your receipts and financial documents throughout the year. Also, consider using tax software or hiring a professional if your situation is complicated. They can help you identify deductions and credits that you may be overlooking.
And here's a practical tip. Always double-check your forms before submitting them. A small mistake can result in big problems or delays in your refund.
I definitely will, David. And friends, remember, this is just the beginning. In the next few chapters, we'll delve into how to maximize your tax deductions and credits and how to file your taxes efficiently.
So don't miss the next chapter where we will talk about special tax considerations and planning strategies.
Exact. So subscribe, like and activate the bell so you don't miss anything. See you in the next video. Bye-bye.